Hey guys, thank you for being here. Happy Sunday morning. Beautiful Sunday here in Austin. I'm going to do the top 20 countdown today. Then I'm going to take Jackson and that little puppy that I'm watching for a big long walk. We're going to have a good time. I checked just a second ago and it looked like Bitcoin was rallying. So let's check that out again. I was happy to see Bitcoin. We're trading at 70,000. It looks like yes, it is rallying, but that just is one of the most classic looks of we'll see what happens. We'll see what happens. I'll feel more comfortable when they get up here at 75 and above, 80 and above. But in any event, primary trend is still down on the time frame I follow. So, hey, BR, how are you doing? Sorry, I know I was supposed to have this out yesterday, but I did it last night. I worked on it last night, but I was too tired to record it after I got done. Mayor's here. Hey, Mayor. All right. So let me do this. All right. Well, remember, it's not financial advice. Consult a professional financial planner for all your financial planning needs. All right. So we have the top 20. The top 20 countdown. We brought back the one at a time reveal feature. So, but I also published all kinds of stuff on Patreon. I think I have a PDF. There'll be a Patreon article linked, et cetera, et cetera. So there's more stuff for you guys too if you want to research a little bit more. But let's just do the countdown. Number 20. Oh yeah, the MaxFactor is my own metric. I think it's definitely better than looking at yield. I think it's even better than looking at it's different than looking at total return. It tells you different things. All right, so here we go. Number 20. TSMY paid about almost $9 in divvies. It only costs about $16 right now, making a yield of about 54%. NAV was up 2.2% on the quarter. I hope that's big enough. I'm working on my graphics. Number 19, Chippy, another chip-based stock. Taiwan Semi is obviously microchips, and Chippy is an ETF comprised of microchip companies. All right, so this thing, look at this, it's paid $18 and it costs $60. So it's about a 35% yield. NAV's up 3.6% on the quarter. Both of them have about the same volatility. So just think of this as like a VIX. It's on the same scale. So both of these are about twice as stable as the broader market. I should have put the stable dex on there because that's what the stable dex tells you. It's the same number, but it tells you the relationship to the broader market. So if I did have the stable dex on here, this would be a 0.5 or something, meaning it's about half as stable as the overall market. All right. It's better than a lot of them, right? IWMI. Now, this is the year of small caps. Man, these small caps are breaking out and have been for a while. So this thing's paid about $6.84. It cost $50 to buy it, so it's only a 13% yield, but it's from Neos. Does pretty well on NAV. It does better than any of these other two dogs on NAV. Up 4.31% on NAV alone for the quarter. 1 year total return of 16%. Not too bad. Not too shabby. All right. Number 17, we have SPIN, the State Street S&P S&P Premium Income Covered Call ETF. Something like that. So this thing's returned about $2.57 over the past year. It costs $32 to buy it right now, unfortunately. So that comes out to around 8%, but has a 1 year total return of 10%. So it appears like over the past year that the income it's paid has been sustainable by the total return. If you care about NAV, you want the yield to be less than the total return. If you don't care about NAV, you want the total return to be as high as possible. And it really doesn't matter what the yield is, or what the what the total return is. I mean, it does, but it doesn't. All right, that's why I made the MaxFactor. I think it does a better job, and we're going to look at some examples of that here in a second. All right, number 16, SCHD. Now this baby's paid about $1.04 over the past year. Of course, it costs $31, so it's only 3.3%, only 3.3%, but it's had 17% NAV upside. Uh-oh, we have somebody's trying to, we have a phishing attempt over here on the PC. All right. But yeah, this thing, I mean, small caps, I don't know if SCHD really be small caps, but I think you could call it value stocks. Small caps and value are rotating back into style. And as you guys have seen, big caps, you know, like AMD and stuff and whatever are getting nailed this year. MicroStrategy's have been getting nailed for a while, but a lot of the big caps that it started getting nailed, you know, fourth quarter last year just have yet to recover. Okay, so SCHD. Now you have to have a 5%. You have to at least pay what the free rate of money pays, which is, I'm just calling that whatever the 20-year paid, which is like 4.5% or something. So this technically doesn't earn quite enough. It's really supposed to be 50% more than the free rate of money, or than a equivalent government bond type thing would pay. Anyway, we made an exception for this, and we do for other ones too, because this is a legitimate retirement investment that some people use. And, you know, I know old Marcus likes to use that barbell approach, and, you know, SCHD might work for one end of the barbell for some people. All right, so we made an exception there, and there's a few other exceptions, but generally you have to earn 5% or more. And like I say, that can go down. If interest rates go back down to 2%, then a high yield fund would be 3%. I mean, anything over 3% or more. If interest rates go up to 10%, like when in the 80s, I mean, in the late 70s, you know, when inflation was really bad, it was a lot worse than it is today, much worse. Anyway, that's you know, if that's the case, then high yield funds, I think, will pay 10 or above. I mean, to you know, it's all related to the volatility. All right, so IAUI, this thing's paid $4.46. It's from this one's from NEOS, so we have two NEOSs on here, IAUI and IWMI. All right, NEOS, and that's the thing, the way NEOS does their NEOS's underlines in those two funds aren't necessarily, well, NEOS creates value in these two funds. One, because IWMI has more, the Russell has more value type stocks in it, and they create value with their option strategy. And so both of these funds are doing a good job without doing too good of a job. You know what I'm saying? Now, IAUI hasn't been out for a year yet, but it's only paying a 10% yield. Okay, so it needs gold, or it tracks whatever asset it tracks, which is I think the underline's called IAU, or maybe just AU. Anyway, but yeah, so we need something like this needs a NAV return of the underlying of at least that much, if you care about decay. All right, MDST is number 14 on our list. Now, let's just pull this one up here. Oh yeah, MDST, that's right. MDST. Okay, that's a good looking fund. They just barely taken back their price from this spring, or not really even quite. But like I say, the value stocks have been going to the front of the class because the MaxFactor picks up on trend and momentum. Trend and momentum is a really important element in investing, as you guys all know that are in here right now. So, so that's why a lot of the ones that were the growth ones, like say AMDW, is not going to be on today's list. Nope, not at all. You know, Misty's not going to be on. Obviously, Misty's not going to be on those lists. But the ones that used to dominate the list just 3 or 4 months ago have all dropped off. And the ones that have value opportunities or more stable option strategies, kind of like NEOS, will go to the head of the class. And that's what we're seeing. So this is the Westwood Salient Enhanced Midstream Income ETF. All right. Well, you can see the chart there. So let's go back to the reveal. Paid about almost 10% yield. NAV return 6% positive. 1 year total return 10%. Very sustainable type situation, or it has been over the past year. So it has a 9.75% yield, and it has a total return of 10.59%. You know, that right there is how you get no erosion. I mean, the total return has to be more than the yield. That's why I get so frustrated when these other influencers, and none of the people that you guys watch, but I don't think, but they say, you know, here's a list of 5 ETFs with no NAV erosion. I mean, they don't know what they're talking about, but because to get an ETF that has no NAV erosion in the future, you need to pick one that has more total return than yield. Now you can just take ones with really low yield. I mean, but some people want a little bit more yield. So there's no way to tell somebody, hey, this thing doesn't have NAV erosion. If the asset goes down, that won't really be NAV erosion, but it's gonna be what these people call NAV erosion. All right, number 13. Money. Speaking of value stocks, or speaking of rotation, money coming out of one area of the economy and into the other. Now, having said that, let's take a look at old Murray here. I mean, it still doesn't look super awesome. But now remember, this is not including dividends. So, but still, even if you include dividends, it still doesn't look super often. And we can see that. Here's the number if you include dividends. That right there is the 1 year annualized total return, 3.6%. At least it's above zero on a 1 year total return. For 6 months, it's still down. You know, and check this out. Here's how it works. Look at this performance for the year. That means NAV performance. NAV's down 53%. So what does that mean? That means for this thing not to have erosion, it would need to pay less than, or I mean, the total return's down 53%. But anyway, but this thing pays 88%. So it pays more than it pays more than its asset goes up, and so it's creating kind of a downward, you know. Now look at this performance for the quarter, 19.3%, and that is only NAV. That does not include, you know, this right here is NAV only, and this is total return. So yeah, performance, or no, those are flows. But anyway, that's impressive. Great job, Murray. I mean, those people that stuck it out, you know, I mean, God bless them. All right, number 12, XLII. This one is industrials. It's the State Street Industrial Select Option Fund. State Street Industrial Select Sector Spider Premium Income Fund. I was not even close, but you guys got the idea. All right, so it's a good time to be industrial. It is a good time to be industrial. Look at that. There's the parent asset right there. I just brought it up on the screen. I'm being informed that Misty had a big Friday. That's good. That's good. But it's still well underwater was my point. But I'm glad I had a good Friday. Heck yes. Heck yes. There's Misty. Misty's not going to be on the list. You can see right here, Misty's 1 year total return is negative 55, and that includes all these dividends down here. That means that the 1 year NAV return is this, or I'm sorry, that is the, 1 year NAV return is negative 82. So the dividend makes up the difference, right? And so anyway, all right, well, Misty's not on there, so forget about Misty, but it just, I swerved into that lane. All right, number 11, GLDI. All right, lately we've seen the past 3 months, gold has been all over the MaxFactor. So not a surprise. This thing's paid $29 in dividends. Now it cost $180, but still that's 1/6. 30 is 1/6 of 80. So 1/6 equals 16.66 basically, or something like that. I think that's really close to what it equals. That's about it. Anyway, close enough for government work, like I always say. All right, well, good job, GLDI. Now we have WEEI. Now this is the second one from Westwood. Westwood also has this MDST. So these are Westwood's out of Dallas. They're in the natural resources business. They do all kinds of stuff. I actually know some. Used to know some people there. I used to work at a company that we had a relationship with them. But yeah, they're out of Dallas and they put together oil and gas deals. All right, number 9. KSLV shouldn't surprise us. Precious metals. That's kind of the deal. Now this thing's paid $2.30 in dividends. It's only been around for like 3 months, something like that. So when you annualize it, it comes out to about 18%. Pretty good because it gets a lot of NAV upside. It has a 44% NAV return, which is ridiculous. That's insane. That is just absolutely insane. Part of the reason the NAV does so well is because it pays less, but that just because it pays less doesn't stop it from something like this happening. That's but what are you gonna do? That's a gigantic gap down. Anyway, hopefully we bounce back. I'm hoping that wasn't so much supply and demand driven, but more technical driven for margin calls and stuff like that. Hopefully AI and hopefully there's still going to be enough demand for silver to kick this back into gear. We'll see. My record hasn't been great lately. I've been sticking with stuff too long. So take anything I say with a grain of salt or anything anyone says. All right. Number 8. RIV. Oh gosh, you got to be kidding me. I forgot to go in there and secretly take all the closed-end funds out. Gosh darn it. I meant to do that last night. I meant to secretly sabotage the MaxFactor so we didn't see any of these, but gosh darn it, I missed this one. Oh well. All right, now River North Opportunities Fund, closed-end fund. Look at that. Flat NAV. It was down 20%, just like the market, but over the course of a year, its NAV was flat, making about a 12% yield. What's not to like? I mean, it has monthly dividends. All right, so that's RIV. So hopefully I didn't miss and get any of these other stupid things in there. I mean, all right, SLJI. This is a good one. Now, this is an ETF. This is what a man invests in right here. ETFs. All right, SLJY. This thing has a trailing 12-month yield. It hasn't been around 12 months. It's paid $2.70, which is about a 15% yield. It costs $36. Super volatile. It's a 58 on volatile. It's not as volatile as K-Silv, which is 100 on volatility. Anyway. Number 6, XLEI, another oil and gas. It seems to all be about value, Russell 2000, oil and gas, that kind of stuff. Low beta type investments have taken over the list. Anyway, so this one might compete nicely. In fact, we'll run XLEI against WEEI. We'll do our first battle royale of the night because that's a fair fight, I think. XLEI we could do it versus MDST. Let's just see how those run. Good look for XLEI from State Street. Now, these came out the last day of July. I did content on them as well, I remember, last year. They were dead money. This thing right here, energy was dead money and went straight sideways until just recently and then just broke out. Great job. Now let's compare it with, no, not that one. No, not that one. No, not that one. WEEI, yeah. Let's look at WEEI. Let's see who the winner. Oh, that's a close one. That is a really close one. They've only been around half a year, but WEEI is starting to show some value right there for the folks. All right, let's go to the next one on the list. Oh, geez. How did I miss this one? I tried to get all the darn closed-end funds off the stupid list. I'm just joking. If anyone's watching the show for the first time, closed-end funds are great. I'm just giving the guys in my Discord a hard time. Closed-end funds are awesome. I just don't. I just don't like them because I didn't discover them because they know about them first. And anyway, I just only like the stuff that I'm talking about. I'm just joking. All right, ASGI. No, this thing is a monster. This thing's a monster. So it's paid $2 and almost $2.50. Been around for a year. Cost about $23. You're looking about a 10% yield based on the price now and the trailing 12-month. But here's the good thing: it's paying you a 10% yield, but it has a 47% one-year total return. So this year, your total return could support your yield. So this one has no NAV, what everyone calls NAV erosion, but it just looks great. ASGI is a monster. Let's compare ASGI and RIV since they're both closed-end funds. ASGI, and RIV. RIV. Well, I think something's jacked up there. Let's just do it like this. Well, there we have it. ASGI is a monster. Surprised that doesn't win this week. I wonder what's better than that one, really. I mean, maybe there's something that's done that well and paid a little bit of a higher yield or something, or maybe, I don't know. We'll see. I mean, supposedly there's 4 that are better than that. I mean, we'll see. I don't know. I mean, we've already had Murney, so it can't be Murney. Murney's been messing up the countdown lately, getting up here, but we'll see. Number 4, DOGG. This is based on the Dogs of the Dow strategy, so this goes with the value theme. The Dogs of the Dow is a mechanical value investing strategy related to dividends, but these guys have taken that strategy that's related to real dividends, and they've put an overlay on top of it. So I think they get the real dividends from the stocks that are in the Dogs of the Dow index. So they try to get the real dividends, and then they sell premium on top of it. So they try to double dip, and they can get about 8% yield, because even as good as these value stocks are, their real premiums, I mean, their real dividends may be 2-3%. Some of them we'd have to look at the average, but they're adding an extra probably 5-6% on top of that by putting the call overlays, the covered call overlays on top of it. 1 year total return is 21%. It only paid an 8% yield, so that's why it's on the list, and that's why it has positive NAV this quarter, because its yield, its total return has been able to support its yield. Number 3, K Gold. Well, I forgot about K Gold. Now this thing's a monster. This thing's up 42% just for the quarter. Paid $2 in dividends. Well, it's going to pay $2 in dividends. The dividends aren't what you buy this for. It's only coming out to about 10% right now, but we'll see though. But the NAV return is out of control on this one. All right, number 2, Fiat. Oh my gosh, I should have taken all inverses off too. But no, if an inverse goes to the top, it goes to the top. I just want the MaxFactor to show what your best choices have been this past quarter. If you had to go backwards, if you could have got K Gold, Dog, Fiat, and ASGI last quarter, you've done pretty dang good, pretty dang well, I should say. All right. I'll get to those questions and comments in a little bit. So, numero uno, number 1. Who do you guys think it is? XOMO. Can you believe that? I bought some a long time ago, just as because I was looking for some non-correlation. And last I think March, when the sell-off happened, it didn't really help that much, and it started getting killed. So I dumped it. And but anyway, whatever. It's had a great quarter. XOMO. I mean, heck, XOMO. So this is a yield max. I mean, the NAV's down. The NAV's down over the past year. You could see it right. Well, actually, this doesn't quite go back a year, so you can't really see, but it looks like it's about flat over the past year. This is saying down 7 or 8%. Well, Yeah, that's pretty good. I think that's a good list. XOMO. So now let me tell you some other stuff. I thought maybe, so here's the key metrics. The highest yield was TSMY at 54%. The most volatile one is KSIL with 102 volatility. That means it wouldn't be surprising for it to be up 100% next year or down 100% next year. That's kind of what a standard deviation means to me. And that's an oversimplified way. This is not a statistics class. That's a back of the napkin way to think of it. When something has a standard deviation, and it's also can be equated to a VIX, the market has a standard deviation of 14, and it has a VIX of 14 right now, or whatever. Sometimes it has a VIX of 20. It goes up and down, but based on how volatile it is. But yeah, so that means as far as the market goes, would be surprising if it was up 14% or down 14%. That's kind of within the realm of that should encompass, so 80% of all occurrences or something, whatever. So like I say, I didn't pay attention in stat in college, unfortunately. So, but I'm sure you guys know. All right, so what is going on here with you guys? Let me check out what my buddies are doing. We got Brad in the house, Skeptic. We got Mayor all the way from Europe, not Europe, from the Middle East over there. Or you were in Israel last time we spoke. I don't know if you still are. You could be anywhere. Okay, I see it. Yeah, I know it. I went into high yield funds. All right, but yeah, absolutely it is. So I think what's happened is you've seen a lot of the high yield funds. And here's what's happened. The high yield funds, and I'm talking Yield Max, Round Hill, Granite Shares, the first group of ones to come out. I'm not talking about NEOs. NEOs and them did index products and stuff, but the ones that came out that started focusing on single stocks and putting together baskets, they were all basically crypto, right? Crypto, AI, like FEPI is basically AI, big data, but there's a lot of crypto and AI based. Crypto and AI are having a rough time lately. So SCHD just naturally kind of went to the head of the class. But yeah, it's not, like I say, it really shouldn't be on there. It's not really considered high yield. So, but still though, you guys get the idea. So I don't have every dividend fund on there. If SCHD has gone to the head of the class, you can bet your butt some other ones that are like that have also, and you guys probably know. In fact, I see one down here, Mayor's talking about SDIV. Absolutely. Absolutely. I'm not trying to put all the low dividend ones on there, but it's just a proxy. SCHD is a blue chip, and SCHD is a highly rated fund. If you look back over the course of a long period of time, it's made a lot of people a lot of money, right? And there's a lot of people that are happy with those swap products. So anyway, let's see. Oh, Mayor's saying I'll see your dog and give you SDIV. Okay, well let's look at Mayor. Let's look at this. So I thought you were saying SDIV is better than SCHD, which it might well be, but Mayor's just saying he likes this as an alternative to SDIV. Well, the DOGG strategy is a dividend strategy. Yeah, so that's a fair comparison. Yeah, the super dividend. I mean, yeah, what's not to like about this? I mean, look at this. Performance for the year. This is NAV performance, 22%. Total return, 34%. What does that mean? It means the total return could support the yield. So, and it also means the yield's going to make up the difference, which it does right there. Yeah, that's a good one. SDIV's a good one. Maybe I should put that in the MaxFactor for comparison, but I'm just trying to look at a proxy. The MaxFactor is really supposed to be for covered call funds, and closed-end funds are fine too. Funds that pay monthly income. Even those a lot of those closed-end funds are selling premiums to pay their. So yeah, that's fine. Let's see. I'm just trying to catch up with all you guys' comments. Let's see if Bitcoin is still going on. It is. It certainly is. I hope this doesn't turn into this. We've seen it before. When was the last time we saw that? I mean, this is a smaller scale, but on a bigger scale, this right here, we had a massive bear flag. Anyway, I wonder if we're trying to put together another one right here. With that bear, let me give you more perspective on bear flags. All right, this really probably hasn't been long on the daily chart. It'd be kind of hard to call that a bear flag yet. But in the shorter time frames, the bear flag's stacking up. But a bear flag is when you sell off, and then you have kind of a, you know, a supposedly bullish, you know, leg up. It looks bullish, but it's really, but when it breaks, it turns out to be a bear signal. Now, a lot of people play the break of these for a new low, or for, you know, and go to their target, I think. All right. So anything else you guys want to talk about? On my Patreon, if you guys are more interested, I put some, like, if you guys like to get into this, I analyzed a bunch of this. Anyway, you guys on my Patreon now. Go. If you want to, go read the article, and I made a handy dandy printout for you, and it tells you. And basically, you wouldn't even have had to watch this show if you just got this printout, right? This printout's only for members of my Patreon, but it has, you know, it has analysis and everything you could want. So go over to Patreon and get that. All right, guys, what are you guys doing today? You guys have any big plans? I'm going to, like I said, I'm going to go take the dogs for a walk, and then I have to work on content all day. I'm behind. I'm supposed to get a video out. Anyway, I'm always behind on content. This job's a grind, but I love doing it because I love talking to you guys, and I love talking about options. I love talking to you guys. So, and we don't just stick with options. We talk about movies and sports and politics, all kinds of things in my Discord anyway. All right, tomorrow, Tuesday, TSYX and TDAX should have low pattern. That's going to be a big deal. I know that's going to make a lot of you guys happy. I don't use margin, but I have used it and abused it. It's worked out well for me many times, not well other times, whatever. It's all good. It's just a tool. Thank you, Brad. I'm trying to get better on the presenting skills. Mayor says, I think CaseFi is perfect. Yes, I do too. It's supposed to catch the upside when things get going again. Yeah. And I had a article or a video on CaseFi. I'm sure you guys have seen that. You guys all watch my videos. All right, guys, I'm going to get out here and go get a bite to eat and take these dogs. I'm kind of hungry. I'm going to go make some eggs maybe and take these dogs on a walk. All right, guys. Hey, well, thank you so much for being here. I haven't put that Patreon stuff there yet, but the Patreon article is not posted yet. So, but it'll be there soon. If you want to go there, it'll be there soon. Just give me about 30 minutes. I got to get these dogs on a walk. Brad says he hears the Curve Copper Fund is launching Tuesday. Well, that's a good tip. I should probably do some content on it, but I try to just do content on stuff I'm really excited about. You know, like a lightning spread fund, or like something that I have something extra to add on. I don't know anything about copper. I mean, I might look at the prospectus and see what kind of strategy they're doing and tell you, you know, what I think about the strategy. But other than that, but yeah, heck yeah. But it's definitely something I know is going to interest you guys. And maybe I need to get me some. I keep talking about wanting to take partial profits. I still have huge profits in K-Silv. Maybe I could dump a little K-Silv and put it into copper and still be hedged or whatever. All right, guys. Well, thank you so much. I appreciate you guys, and I will talk to you guys soon. All right. Copper set to Skyrock Monday. Oh, copper set to Skyrock Max. Heck yeah. All right. Well, let's get some. I have a little cash. I'm like holding 5% cash right now or something, waiting for lower prices. I want to actually buy some more Mimi and Mago back. I mean, some more Mimi and Mago a lot lower from here before the next bull run. I'd love to own Mimi and Mago, you know, but anyway, but yeah, we get some copper in the meantime. Copper should be fine this year. All right. I'm glad to hear it. All right, guys, take care.